All right. So I told you last time that we'll discuss time periods of finance in the next class. So today this is our topic. Um, Now, sources of finance are available to businesses. We understand that, and we actually discussed two types of sources of finance available to a business, that is internal and external. But we can categorize the sources of finance on the basis of time period as well. That for what type time period they are available to a business, right? We call them uh, again um, category of a source of finance on the basis of time period. So now let's discuss that how many sources of finance available with regard to time period. First is short-term source of finance, and it is usually available for up to 3 years, right? And what does it mean when I say the short-term source of finance is available up to 3 years? What does it mean? Can you tell me? Zainab and Mana?
So can you repeat?
My question is that one of the category on the basis of a time period of the source of finance is short-term source of finance. So what is it? What does it mean when we say that short-term source of finance has a time period of up to 3 years? How can we explain that? No idea? All right, it's
No.
fine if you. Okay, fine. Now it means that that finance is available for 3 years. You can get the benefit from that source of finance up to 3 years. Okay. Now we'll discuss that. What kind of short-term source of finance available to different businesses. But before that, we talk about other sources of finance available with regard to time. Medium term. This is from 3 years to 10 years. They are available to business for 3 to 10 years. And then we have a long-term source of finance, and they are available for more than 10 years, right? So if I say, okay, all right, so you understand this, let's now discuss them in detail one by one. Now, short-term source of finance, the example could be overdrafts. Overdrafts, you know. Now, why they are called short-term? Because you have to pay it back within within days. So, for example, I told you that short-term finance is available for up to 3. So, any source of finance which is available for less than 3 years as well, so that will be considered as short-term source of finance. So, as soon as you get money from the bank more than the amount which is there in the bank account, you have to pay that at a short notice. Sometimes you just get that facility for 20 days, 30 days, 40 days, 45 days, right? So this is how it is done. So it is a short-term source of finance because you have to pay it back after a short time period. This is one. We have discussed overdraft. So debt factoring, we have already discussed that as well, and this is also a short-term source of finance. Why? Because when you approach a debt factor, that is a specialist agency which actually buys the debt of other business or an individual, okay, you have to tell that the amount I will collect, that will be after 2 to 3 months. So you can't approach a debt factor by saying that yes, there is an amount still to be recovered by me from the people or from the other business, but it will be received after 3 years, 4 years, 5 years. Why? Because then it won't be considered as short-term source of finance. Because I told you that this is for up to 3 years. So that is why debt factoring is also part of short-term source of finance, because generally the amount to be collected, or whatever the amount that is collected after 2 or 3 months time. So that is why it is also called a short-term source of finance. Okay, then we have Trade creditors. Now, trade creditors, you understand, when you buy something on credit, right? You buy something on credit, you do not pay cash on the spot, and you promise or make an agreement to pay it at some future date, which is normally 2 months' time or 3 months' time. You know that. And we call it credit purchases. You purchase something, but you have not paid cash on the spot. But you actually borrowed some time frame to pay that amount. So again, because credit purchase is not done for more than even a year, because this is normally for 2 to 3 months or even 4 months, and not more than that. So that facility is available to business, but business has to pay it back after the time period, which is usually 2 to 3 months. So that is why it is also called a short-term source of finance. Then we have medium-term source of finance. Leasing is one of the medium-term source of finance, and there is hire purchase. Then we have loans as well. So okay, first I'll talk about loans, and then I'll come to leasing and hire purchase as well. Loans can be long-term as well. Okay, but they can be medium-term as well. Why? Because if you have availed the facility and the bank has agreed to lend you money for, let's say, 5 years, and you are supposed to pay it back after 5 years, so this is a medium term loan. No? You can get the benefit from that amount for 5 years, and then you have to pay it back. So it's a medium term loan. But a loan, a bank loan, can be for more than 10 years as well. So then in that case, it will become a long-term source of finance, because for long-term source of finance, the time period is more than 10 years. So this is understandable. Now, hire purchase and leasing, you need to understand that. Do you know the difference between these two terms, leasing and hire purchase? Any of you?
Yes, sir.
Yeah, please explain.
Sir, hire purchase is when it allows business to purchase an asset by paying monthly installments with interest rate, and whereas the leasing is when it allows business to use asset by paying installment with interest.
All right. Okay. Very good. Zainab, great answer. Now, listen. Sometimes there is a misconception among people as well about it. Leasing is a concept which says that you actually make an agreement to use a product, a machine, an equipment, and a car, whatever it is, right? So, okay, you use it for the time period for which you pay it in installments, right? That is similar to paying rent of the equipment. You keep on using it and you keep on paying the installment of that equipment as well, right? Okay, but later on, you can decide to purchase it as well. Like, let's say if you make the full payment in installments along with the interest rate, you can become the owner of that equipment or machine. Otherwise, when you enter into a leasing agreement, you do not become the owner. It means you do not have the right to sell that asset because you are not the owner. So that's why generally I know that people say that I have bought car on lease. This is a wrong statement. You cannot buy a car on through lease. Okay, until and unless you make the full payment along with the interest rate, you cannot buy that car, because once you do it and you plan to buy that, then bank releases a no objection certificate statement, that is NOC, no objection certificate. It means now the car, let's say in this example, wholly owned by the person, okay, because the person has made the full payment. So now it is actually the person's authority to even sell that car or give it to anybody else, because now the car fully belongs to that person. Right, so leasing, and along with that you have to pay an interest rate as well. So this is the advantage is that without making the full payment, you can use that a car or equipment or machinery or whatever it is, right? Without making the full payment, and after 2 years, when you feel that now it's no longer required, you can return it. So it means you can avoid making the full payment. Imagine you want the machine or the equipment for 2 years only, but you have bought it. The useful life of the equipment is 5 years. After 2 years, you do not need it now. So now there is no need to keep it. Now you will try to sell it. You might not get the same amount, okay, or it will be lying idle at your workplace, and it will get depreciated by the time. So that is why this is a better option. That if you want to use it for some time period, let's say 5 years, 6 years, so you can hire it on lease, hire that equipment or a car. But usually leasing is done for those items which have a resale value. Remember, which has a resale value, because otherwise, if you, let's say, lease something and then after 2 years, 3 years, 4 years, or 5, 6 years, you give it back. Now, what is the advantage of the person who is giving the equipment to you on lease? Because the person will get the item which will have no value at all. So in that way, that person will be at a loss. That's why generally those items are actually leased which have a resale value, such as cars. So yes, if the car is taken away from you, it can still be sold and can give you a sufficient amount as well. So that's why I'm telling you. So when you actually lease your car, for example, and you keep on using it, and you do not, let's say, make the payment of installment, maybe once or twice, the bank reminds you that your payment is due, and after that, they can snatch the car anytime. They can stop you on the road and tell, "Sir, please get out of the car," because because the owner is the bank. You are not the owner in case of a leasing agreement, and then they will take the car away from you, and you cannot do anything, despite making the installments in previous years. So, and a disadvantage is you cannot own a. So the disadvantage, another disadvantage is interest rate needs to be paid, and interest is, it means, let's say if you buy something on lease through that leasing agreement, that eventually you make the whole payment. So then you can decide to take the car, right, as an owner. But you have to pay more than the actual market value of that item. Why? Because there is interest involved. So let's say if you're buying a car through leasing, this is your idea, but you will obviously start making payment. So let's say the original value of the car is, the market value is 20 lakh, and you actually end up paying 25 lakh. Why? Because 5 lakh is actually the amount over and above you pay in the form of interest. So that is the disadvantage. Hire purchase, this is something which is more related to a purchasing agreement rather than taking something on hire. As soon as you buy it, you become the owner. Simple as that, right? So, but you make the payment in installments. There might not be any interest, I'm telling you, okay? But this is the way the sellers, they are able to sell their goods. Like, for example, there are many people who are not able to make the full payment. So sellers, they actually give them the offer. Okay, make the payment in installments. So at least in that way, the seller will be able to sell their items to those people also who are not able to afford those items by making the full payment. So sales definitely increases, and that is the advantage to the people who are selling it. But if it comes to getting the source of finance through hire purchase, now again you do not need to make full payment. You will make the payment in installments uh, uh, in a time period that is, let's say, 5 years, 6 years, 7 years, 8 years. So it's easier for the business to pay it back, because they will use the equipment, they will generate revenue and profit out of it, and then they can pay it back easily from the revenue they will obtain from it. So this is how it is easier as well, hire purchase. But hire purchase is an agreement to purchase an item, to buy an item, whereas leasing is an agreement where you actually hire something uh, uh, for using it for some purpose, and you are hiring it. Simple as that. Okay, loans, you understand. Then long term loans. Yes, I told you that loans can be medium term, they can be long term as well. Then sale of shares as well, and then there are debentures as well. So I told you debentures. What are debentures? I'm not going to discuss it, and why it is there in long term source of finance. Zainab and Mana, why debentures are there in long-term source of finance?
Sir, because there are certificates that need to be paid for like 15 years or
After 10 years.
20
Yeah,
years.
absolutely right. Yeah, that's right. Very good. Similarly, sale of shares, it's actually part of long-term source of finance as well. Okay, and this is also. But do you really pay it back? I told you sale of shares. Whenever you get finance through sale of shares, it is a permanent source of capital. We discussed that as an advantage. Actually, so that is why it is a long-term source of finance. You will pay it back, but when you plan to close down the business. When business is winding up and now there is no chance to continue the business, now you have to pay the amount back to the shareholders of the business. So it will be a very long time period. But if business keeps on going, then the amount remains in the business. And that is why it is called a permanent source of capital. So it comes in the category of long-term sources. All right. So moving onwards. Okay, then. Okay, new issue, share issue. We don't need to, I think, discuss it because they don't ask such questions. Maybe in accounting they do ask it. Okay, now quick receipt. Short term, 3 years, up to 3 years. Then medium term, 3 years to 10 years. Then we have greater than 10 years. Then overdrafts, we discussed that. Like you can see that there is actually the right circle. You can see overdraft charge. So they can charge you for the overdraft as well. And how do they charge? In the form of interest rate. Remember. Overdraft arranged by the bank. This is a facility given to the already existing customers of the bank who have their money in the bank account, and they can get more than the amount which is there in the account. So spend more money than available in the bank account. Can be used for wages, paying suppliers, etc. Because it can be arranged quickly, faster than the loan. Because loan still requires some legal formality, and you may require a security to be offered. But in an overdraft, because you're already an existing customer of the bank, so the bank quickly releases the money to you. So when banks does it, so obviously you will be able to meet your expenses quickly, such as wages and paying supplies, because you cannot hold on such type of expenditures I told you earlier. Without paying wages, you cannot actually make your workers engaged at the workplace doing their work. Similarly, suppliers, you cannot actually convince them without paying them to supply again the raw material. So you have to pay them quickly. Flexible form of borrowing, yeah. Why it is called flexible? Because you can get the amount for any time period, as long as it is up to 3 years. You can get it for 28 days, or you can get it for 42 days, 53 days, 60 days, up to your requirements. So it means that it can actually meet varied needs of the business. And why it is useful? Because if you, let's say, get the money for 20 days, that overdraft facility, as soon as you pay the money back, now you do not need to pay the interest rate. Interest rate will be paid only for those 20 days for which you have used that money, right? So again, it can relieve the business from paying more interest rate throughout the year or years. So this is all. That is why it's called flexible form of borrowing. That if you can meet varied needs, which actually has a length of let's say 3 months or 6 months or 8 months, 12 months. So you can do it. You do it easily, right? So then this disadvantages, interest rate is variable. Yeah, it can increase as well. So that is one of the issue there, and it might be higher than the interest on loan. Why? Because they are not actually taking any security from you, so they might charge a higher interest rate, and it can increase as well. In the case of interest on loan, it does not increase. It's a fixed amount which you have to pay, right? Short term to pay, repay, yeah. Sometimes banks can say to you as well, because this is an extra favor bank is giving to you, na? So banks can say, all right, you have to pay the cash within a week's time or within 2 weeks' time. They can say that. But in case of a loan, they can't. If you have taken a loan for 3 years, they can't actually force you to pay it back before 3 years. But in case of overdraft, they can. So sometimes you get into trouble that how to pay the amount back within a couple of weeks if you are not able to do it. Okay, then trade credit, businesses delay paying its suppliers. It is just like credit sales. Okay, so leave businesses in better cash position because you can use that money somewhere else. Rather than paying it to your supplier, you can use it for some other purpose, like paying wages to your workers or payment to your supplier. Okay, and then when you get your production done and you are able to sell your goods, then you will be able to you can pay it back to the your suppliers as well. So customers buy supplies from manufacturers and they get the goods in return, but time period to pay for suppliers. So rather than paying, they actually borrow some time period from the supplier, right? And later they pay it to the supplier, right? They do not pay the cash. So that cash remains with the customer for that time period. Remember? And that money can be used by the customer for many purposes. And later they can pay it at the time when they promise that. Okay, so if I see the advantage, interest free, yeah, there is no interest at all. But the problem is possible refusal of discount because there's a cash discount involved. You know that suppliers normally offer a cash discount. Suppliers that okay, if you pay like you have 30 days credit, if you pay within 10 days, you will be 2% will be off. Okay, 2% will be off. That is a cash discount if you pay early. But because you are not paying and you are actually requesting for a credit period, so you might not be getting that discount. So it means that the goods you buy that will be expensive compared to if you avail that discount and paying early. Then we have debt factoring. I explained that, so I'm not going to explain you again because you already know about what is debt factoring and what are the advantages and disadvantages. So I'm jumping on to medium-term finance. Now, see, hire purchase and leasing. See, in hire purchase, payment is done to own the equipment. The agreement is mainly to purchase an item. That's why the name is hire purchase. Whereas in leasing, when payment is made, what do? You actually get an option to buy. It means when you make the payment, you do not become the owner, but you have an option to buy. Otherwise, that or you have to return the equipment, right? If you don't pay further, simple as that. Okay. Now, if you see the hire purchase fixed assets over longer period of time. Advantages, no upfront large sum of money needed for asset. Yes, you do not have to make the whole payment. You can use it and then after using it, whatever benefit you are getting from that equipment, let's say revenue, because you are producing item, then you are selling it, so you are getting revenue, fine. And then it will be easier for you to pay from your revenue the installment of that equipment, right? So it's easier for the businesses. They can get their business going. Then disadvantages, cash deposit needed at the big so yes, at least you have to pay some amount at the start. That could be the 30% of the total amount or 40% of the total amount. So still something needs to be paid. Interest rate high, yes. And we say if higher purchase is there, so sometimes there is interest rate as well, and it could be higher. Interest rate is an expense, and the expense actually reduces the amount of profit for the business. And once profit goes down, it shows it because you know profit is a symbol of success. So once it goes down, it looks that business is not performing well. Even owners or the shareholders might not be happy, and they might like to withdraw the investment from their business. So maybe spreading a bad image of the business as well. Then we have leasing. Again, allows firm to use the asset without purchasing it, right? Without purchasing it. Although you can decide to purchase it at the end of the time period by making the full payment. Can be purchased at the end of leasing period, right? So advantages, no upfront large sum of money needed for assets, so same as the hire purchase. Then we have maintenance done by leasing company. Yeah. What kind of maintenance? Can you just tell me? Manha and Zainab, do you have any idea?
So like if they sign an agreement of lease for a car and the paint damages of the car, the leasing company would paint the car again.
Very good. Great. Mana, great. You are good. In fact, you are too good. Yes, because you know that you're using your car and your car meets an accident, and now you want to get it repaired. So it can be done free of cost, and leasing company will be doing it. Yes, so that's right. Uh, okay, then we have disadvantages. Total cost higher. Yes, I told you that actually eventually, if you plan to buy the car, so you have to make the payment that will be a lot higher than the actual value of the car because it includes higher sorry interest rate as well. Then we have long-term finance. So issue of shares, you know that we call it equity finance as well because you get money by selling shares. Only available to limited companies. I told you earlier, public and private. It is not available to sole trader and partnerships. So do remember, if in the question a business scenario is given and they say that it's a sole trader or a partnership business, and they say identify any two sources of finance available to a business, and if you write issue of shares, do you know what will happen? Can you tell me? Manan Janab, you will get zero. Why? Because issue of shares is the option which is not available to sole trader and partnership. So that's why you need to be very careful while reading the scenario, which is a business situation which is given at the start of the question. Public limited company, okay, you understand this. I'm not going to discuss it. Long-term finance further. Okay, issue of shares. So I'm not going to actually discuss it. New issues and right issues. Do you know about it? Manan Janab?
No, no, sir.
No, actually, new issues. Right issue means that when you want to sell your shares, you give the right to your existing shareholders first. That okay, we are going to sell more shares. If you want to buy, so you will be preferred. Who? Existing shareholders. So that other shareholders should not join the company. You know that it's not good for the already existing shareholders. So new shares is when you actually sell new shares and it can be bought by anybody, right? So that is the slight difference which is there. Um, then we have okay, advantages. See, permanent capital. I told you earlier, I'm not gonna develop it because you know how to develop it. Then no repayments. Yes. So no interest. It's quite easy. Dividends paid after tax. Yeah, that's right. And then we have a balance of ownership. Okay, and let me ask you to develop that. Permanent capital, you understand. No repayment, again you understand. No interest. So can you develop this point? If they say there's an advantage that no interest needs to be paid, how can we develop it?
Sir, can you repeat?
My question is, I know that you know how to develop permanent capital, no repayments as advantage. The third advantage of using issue of shares is no interest. So I understand that when you issue shares, you do not need to pay interest rate. That is an advantage. My question is how it is an advantage. Develop it. Yes,
Sir,
please.
basically, interest is expense, so if there will be no interest, it will increase the amount of profit.
Very good, Zainab. Great answer. So you really remember what I actually said earlier as well. Great. So you have a great memory, Zainab. All right. Then we have medium term finance, bank loan. I told you bank loan can be medium term, it can be long term as well. We discussed about the advantages and disadvantages earlier as well, so I'm not going to discuss. Long term, okay, I'm going to skip that because this is actually not that. Okay, just a minute. I just forgot to tell you one thing. Let me get back to it. Yeah, this one, dividend paid after tax. Yeah. So it means profit will further be divided among the shareholders if there are more shareholders, if you use the option of the shares. And balance of ownership, that is actually diverse of ownership. Now ownership will be further divided. No? That is actually not good for existing shareholders. And I told you they might lose the control as well. Earlier, if they were the board of directors as well, along with the shareholders, being the owner of the business, now they might not remain the board of directors because now the new owners and they might not like to vote in favor of you in the annual general meeting. All right. So let's move on. This is, you understand, secured and secured against collateral, uh, because secured means that when something is given as a security, that if you don't pay, they will sell up that security to recover the amount. You know, understand? So it's not that. Debentures, again, you know about it. Same as external finance. It's a long term and an external finance. So advantages: long-term loan certificates of a no collateral legal. There is disadvantages: creditworthiness and reputation essential. Because if the business is not having good reputation, nobody is going to buy debentures. Because if you buy debentures, it means that you are giving a loan to the company. So if the reputation of the company is not good, nobody is going to give such loan to the company. So the debentures will remain unsold. So there is an interest as well. You know how to develop interest rate. So I'm not going to discuss that. Now there's an exercise and you will be telling me, right? Short term, medium term, and long term, one by one, starting from Manha. Uh, Manha, overdraft, what is it?
A short-term
Right.
finance.
A short term finance, and internal or external?
External.
External. All sources of finance which are there, they are external. Why? Because they need to be paid back. Internal source of finance have no time period, right? Because you do not need to pay it at all. That's why they do not come in this category. You always see external sources of finance, they are in short term, medium term, and long term. Because internal source of finance is not paid back, right? So then debentures, yes, Zainab.
Sir, long term.
Long term, very good. Issue of shares. Mana, back to you.
So long-term.
Long term, great. 4-year bank loan. Zainab.
Uh, Medium term loan, sir.
Medium term, great. Trade credit, yes. Manha.
Short-term.
Short term, great. Hire purchase. Zainab.
Medium term. Medium
Medium
term.
term. Yeah, hire purchase and leasing, both. Like for example, you get a car on lease. So normally the time period is for 5 to 7 years, not more than that. All right. Now this is an important question, and they may ask you about it as well. Choosing the right source of finance, like either to go with internal source of finance or external source of finance. If it is external source of finance, for what time period you require it? Either you will go for short term, medium term, or long term. So these are the questions you need to answer before you source of finance which is suitable for which. So let's see, first is purpose, right? So if the purpose is, let's say, um, paying wages to the workers, payment to your suppliers. So not much amount is required and you can pay it back quickly. So you might require a short-term source of finance such as an overdraft, okay? Because you need to pay it immediately and short-term source of finances are available immediately compared to long-term sources of finance. Think about issue of shares and debentures. Yes, you can get a large amount using those sources, but it may take time. You need to you need to wait for the people who are interested in buying debentures or shares, right? So purpose matters, or if let's say your purpose is to take over another business, right? Now you require a big amount. So for that, external source of finance might be more useful. Time period, again, it's the time period for which you require it. It's short term. For 2 years, the short term source of finance is beneficial. If let's say it is for 5 years, 7 years, then medium term, or then otherwise long term. It is better that while developing, you can come up with an example as well. Let's say you want to use machinery, equipment, and you feel that you will be using it for 3 years or for 5 years, and after that you might not be using that machinery because machine will get out of date and then it can't be used any longer. So then you won't buy the machinery, you will leave it for 5 years and you will use it and then it will be returned to the original owners there as well. So this is how you can come up with an example as well. It's a good way while developing your point. If you come up with an example, examiner becomes really happy. But remember that you have limited space. So you need to be very precise while giving the example even. Then amount needed, yes, how much amount is required, because you know that large amount can only be obtained through external sources of finance. And if you require a small amount, so either an internal source of finance can be used, or a short-term external source of finance can also be used. Status, yeah, it depends on what status the business has. For example, if the business is a sole trader or a partnership, then issue of debentures and issue of shares are not the options available to them, right? Similarly, so you have to use other options. Similarly, if it is a public limited company or a private limited company, then owner's savings is not the option which is available, because owners are not responsible to use their personal money to support the business in case of public and private limited company. So they have to use other options. Then size of the business, obviously larger the size, the greater will be the amount that will be required. Okay. Then of course you might be using an external source of finance, that is usually a long-term source of finance. But if it is small, then you might be using internal source of finance, even not short-term external source of finance. Internal source of finance might be sufficient. Then we have control as well. If you do not control, it's normally in the hands of board of directors in case of limited company. You know that. So if you do not want to lose control, which is the option you won't use? Can you tell me, Mana and Zainab? Which is the option you won't use in a limited company if you
Sir,
do
the
not want
issue
to?
of shares.
Very good, Mana. Great answer. Issue of shares is not the right option if you think that it is risky and you might lose control in the future. Great. And you won't remain the board of director. Risk. If a lot of risk is involved, then better not to use external source of finance, because if you lose that money, it's not about losing the money. You have to pay it back as well. That is the issue. And they will collect it somehow or the other by either selling your security or your property even. So you need to see that if more risk is there, better to use your own money, so that even if you lose it, there is no you say possibility that you have to return it the amount. Gearing. So gearing, I told you. I think I forgot to tell you highly geared. There was a term which was there in the earlier slide as well. Now gearing is actually a ratio. Let me just tell you. Just a minute. Uh, okay, just a minute. I was using some. I was actually doing something else. I can tell you here. Now gearing is actually calculated like this. Let me just explain that. This is um, capital obtained using external source of finance, right? External source of finance, and we divide it with total capital of the business, right? Total capital of the business, and then we multiply it with 100, right? So let's say there's a business where the capital obtained using external source of finance. I think just a minute. There is a spelling mistake there, right there. External source. Okay, let me just write it again. External. So now let's say the external source of finance used by the business, and they were able to obtain $100,000. Okay, and now their capital is let's say what should I write? 200,000, or let's say it is 1,80,000 into 100. Now, can you tell me the answer? Can you help me out in figuring out the answer, please? You don't have the calculator, right? Janavar Mana?
Sir, its answer is 55%.
55%. Thank you very much. Yeah, okay. Now it means you can see that. Now, what does it mean? It means that we'll say that the business is highly geared. Remember, I am writing business is highly geared. Now, what does it mean? Actually, if I say, if I explain you what does gearing tells you, it tells what proportion of the total capital was obtained through external source of finance. So if now, let's say the answer is 55%, that means that more than 50% of the capital was obtained through external source of finance. So it is highly risky because once they start claiming their money, more than 50% of the capital will be taken away from the business. Then how would the business be able to run their activities? It is not possible when more than half of the capital will be taken away, right? So that is why you need to see that if already too much capital has been obtained through external source of finance, you won't be using the external source of finance. But let's say if it is too low, for example, if the gearing is, for example, 25%, okay, 25%. Now it means only 25% of the capital was obtained through external source of finance. So it means now you can use, if you require further finance, you can use an external source of finance such as long-term loan or debentures, okay, because you know that it won't take it more than 50%. So you need to see that as well here. Say whether what is the percentage of gearing over there, whether it is highly risky to use external source or not. Any question regarding this concept, Manan Janab?
No, sir.
All right.
No,
So
sir.
thank you very much. All right. So Manan Janab, you were there yesterday as well, along with Hamna, right? And on Friday, uh, um, Zainab missed out, right, Well, Zainab?
Yes, sir.
Yeah. Okay. All right. Fine. Okay. So now, see, risk is the danger that failure or loss will occur. Gearing is a measure of risk, the proportion of total capital raised from long-term loans. Now, long-term loans is obviously one of the example of external source. You can say long-term liability as well. Are you familiar with the term long-term liability? Mana and Zainab? Are you familiar with that?
No, sir.
No, okay. All right. So I think then I do not need to explain it here because we will be covering that in the topic which we have not covered yet. All right. So just a minute. Business plan we can discuss a bit and then we are done with it. And there is nothing more to discuss. And in the next class, we will be solving answers live in the class, and you will be participating. So come prepared as far as this chapter is concerned. Uh, and I have already shared the notes as well. If you still have a question, you can come up with questions in the next class, and then we can move on to solving questions live in the class. Okay, all right. So this is a business plan. You know about what is a business plan? Do you or not?
Yes, sir.
All right. So business plan actually tells you about every possible detail of the business. It tells about the objectives of the business as well. It tells about various costs which are involved there in the business, where is the location of the business, what profit business can earn in the future, cash flow. You have not, I think, learned that what finance is required, how much loan is required. So complete detail is there, but we are not going to discuss it there because we will be discussing business plan later as well. All right, so I'll stop here. That is all. Thank you very much. I'll see you in the next class. So do come prepared on Friday.
Sir, we are starting our summer vacations this week, so are we going to have classes in the vacations as well?
Bye.
Huh?
Yeah, okay. I will be having the classes, but I will change the timing. Now, if you could not feedback to management as well, because principal actually told me to carry it on so that I can cover the syllabus along with the past paper practice as well, so that you will be prepared soon after you will come back from your October-November examination. So you won't be having any trouble in answering questions as well. So I believe that we will continue at least in the month of July as well. So, but I'll still confirm that. And if I send you a message, join the class, it means that we'll continue. But we can change the time. Like normally on weekdays, if you're busy, weekends you are busy, so we can just plan a suitable time on weekdays uh, as well. Right, Mananjana?
Okay, sir.
All right.
Yes.
So, okay. Bye, Khudafez.
Allah Hafiz.
Hafiz.